If you look at what's happening to the silver price, it looks like it's going to carry on going up. And, a lot of people think that the $50, we're at $40 at the moment. A lot of people think that $50 is easy peasy from here. And, I'm hearing many people talk about silver going into the hundreds of dollars.
Now is the time, if you haven't got it already, to hold physical gold outside the banking system, obviously, because it is still today, even though the increase has been very high for I said, over 10 times in the last 25 years, that's just the beginning, in my view. We're going to see a much, much higher gold price. So silver is often called poor man's gold. So a lot of people who can't afford to buy gold will buy silver. So we will see a mass market going into silver and a speculation which will be much even bigger than the Hunt brothers in the late 1970s.
Silver is once again pushing toward its critical $50 threshold, and momentum suggests that the move could be far more significant than in past cycles. Unlike the brief speculative bursts of 1980 or 2011, today's setup is anchored by industrial demand, structural shortages, and a broad reallocation of wealth from fiat into hard assets. Gold, already up more than tenfold since the turn of the millennium, remains the foundation of wealth preservation. Still, silver is increasingly positioned as the high beta counterpart, the poor man's gold that often outpaces gold in speculative phases. Clive Thompson and Egon von Greyerz, two long-standing voices in the precious metals arena, emphasize that the institutional shift is now unmistakable. India's deep-rooted cultural affinity for gold is being matched by new regulatory changes that channel institutional flows. At the same time, China's insurers are being permitted to allocate to gold reserves, with limits expected to expand in the coming years. With BRICS nations actively diversifying away from the dollar and inventories of physical silver dwindling, the supply-demand equation grows tighter by the day. Our message is clear: gold for stability, silver for explosive upside. Both are essential shields against currency debasement. Stick with us, and if you find this analysis valuable, make sure to like this video, subscribe, and hit the notification bell so you don't miss the trends that could shape your financial future. We appreciate the support and hope you enjoy the video.
So we talk about India here, and of course they are, as a people on the whole, all Indians hold gold. And here we're looking at now institutional money also moving into gold because of the change of rules. The same is happening in China. China is now talking about first 1% for insurers into gold will be allowed, and that is most probably going to increase to 5%. And when these massive countries put major amounts of money into gold, we are going to see a massive demand that, as I have repeated many times, cannot be met by physical gold at today's prices. So, because there is not enough gold in the world to deliver to all of the buyers that are now going to look for gold. So the only way that they can get gold is to pay higher prices. And we are going to see gold going up by multiples from here. I repeat, going up by multiples. The world doesn't realize that, and the gold has been now going sideways since April, really. From the beginning of April, gold has been going sideways. The next move is imminent, in my view. Whether imminent is tomorrow or in a week or in a month, it's irrelevant. So we have now seen a consolidation of over 4 months, and the next move is very near. So that's why, as we've been saying since 2000, hold gold for wealth preservation. We went into it at $300, it's now $3,500, and we're going to see gold going up to much, much higher levels. And now is the time, if you haven't got it already, to hold physical gold outside the banking system, obviously, because it is still today, even though the increase has been very high, for I said, over 10 times in the last 25 years, that's just the beginning, in my view. We're going to see a much, much higher gold price. And it's not because I'm a gold bull. It's only because the world's currencies are continuing their drop to zero, and that will be reflected, obviously, in the gold price. It's a trend, and we've been saying this now for a few years, you and I, and especially since the US and therefore the EU always follows the US, whatever they say. The EU and the US confiscated the Russian assets held in dollars around the world. Now, it is obvious that the Eastern banks and the BRIC central banks are not any longer going to hold dollars within the global monetary system or banking system or central banks. That's why we're going to see a gradual shift here from dollar assets as reserves for central banks into gold and silver. Now people are starting to realize that silver is also incredibly important. And therefore, this is, as you say, a small move, but it's the trend that counts. They're moving into gold, they're going into silver. Silver market is very small and very low inventories. Actually, no inventories. There are always shortages normally. This is why the silver price does not need much demand to go up substantially. Solar panels are having massive demand for silver. Now also in China, they're starting to manufacture solid state batteries for cars, which also requires a high silver quantity. So silver yarn is going to explode and go up many times faster than gold. And in industrial products that they use silver, it's such a small amount, so it's not going to increase the prices a lot, but it's going to increase the demand for silver. So yes, silver prices will go up substantially in the next few years. Remember that silver is more than 80 times less in price to gold. So silver is often called poor man's gold. So a lot of people who can't afford to buy gold will buy silver. So we will see a mass market going into silver and a speculation which will be even bigger than the Hunt brothers in the late 1970s and up to 1980 when silver went from virtually a couple of dollars to $50. Then, of course, it went down dramatically. This time we have an underlying industrial demand of a magnitude that the world has never seen before. So this is why silver will be going up for a much longer period and much faster than it did in the late 1980s. So silver will go up 2-3 times as fast, at least as gold. But remember, silver is very, very volatile. So holding just silver is, in our view, dangerous. You could maybe hold silver 25-30% of your total precious metals holdings, but hold gold also because it's much more stable than silver is. But the upside in silver, speculative upside, is enormous today. Now, compared to money supply, monetary basis, whatever you compare it to, gold is extremely undervalued today. And we will see it overshooting. And of course, the monetary base, remember, or the money supply will grow exponentially in coming years because of the amount of money printing required to satisfy the deficit spending of most governments, especially Western governments. And that, of course, gold will follow. So, the gold is the only money that has survived in history. And why is gold the only kind of money that has survived? Because it's the only money that's produced by nature. And therefore, it can't be manipulated, the physical gold side, and it can't be manufactured. And all other currencies are man-made, and gold, as I said, is nature's money. And this is why we will see gold as the only instrument that over time will maintain its purchasing power like it has done for thousands of years. More important than ever today, please hold some gold for your own protection and insurance and for your family or for your company or for your investment portfolio, and also hold some silver because you see tremendous potential there. But hold it outside the banking system in a safe jurisdiction, preferably outside the country where you live. It's very important, so that you can actually reach your goal if a country wants to confiscate it in the country where you live.
Silver has now convincingly broken through the $40 level, touching above $40.70, with a rare 2.5% surge in a single session. For a metal where 0.5% is already notable, this is a powerful statement. Much of this demand isn't retail buying. It's large institutions stepping in with deep pockets, taking delivery of thousands of 5,000-ounce bars on COMEX, something far beyond the reach of ordinary investors. Europeans, in particular, are heavily investing in silver and gold, reflecting a growing distrust of the dollar and fiat currencies more broadly. Meanwhile, the supply picture is tightening. Data from the Silver Institute shows that mine output has been steadily declining since 2016, while demand has risen year after year. The gap between supply and demand has widened since 2021, forcing the system to rely on recycling to meet industrial needs in electronics, solar panels, and now even advanced batteries. And with silver recently added to the U.S. Department of the Interior's draft list of critical minerals, a government stockpile program could soon add another layer of structural demand. The stage is set for volatility, but also for significant upside. Silver looks poised not only to retest its historical $50 high, but potentially blast far beyond it. Let's get back to the interview.
Today, silver smashed through the $40 an ounce level, jumping over 2.5%. It's now well over $40.70. Now, a rise of even 0.5% for silver is pretty wild in the world of precious metals. 1% is very unusual. 2.5% is a big rise. Most of the silver is owned by Americans, but rising prices push some to sell to meet the European demand. So why are the Europeans buying? Well, it comes down to trust. They trust silver and gold more than the dollars when times are uncertain. The trouble is, with the dollar, you don't know what's going to happen tomorrow. With silver, there's not a lot can happen. With gold, there's not a lot can happen. So who's putting their money into silver right now? It's mostly the big institutions with deep pockets, the kind of people who have access to insider market forecasts, the most elite forecasts of the economy and everything else that you can get. And these will be very well-connected people. How do we know that these are well-connected people? Well, we can see the kind of silver which is being bought. Let's have a look at this COMEX delivery notices chart here. Now, as you can see, the COMEX deliveries in the month, and we're talking about the silver one on the right-hand side, the COMEX deliveries in the month of September, this is the 1st of September, and these notices were given on Friday. The notices for delivery of silver is 8,286 contracts on the first day. That's more than the entire September last year. And you can see by looking back month over month, if we go back through the months, you can see that every month, more or less, with the exception of July, a lot more silver was called for delivery than is usual. Now, this is not mom and pop stuff. Each of these silver bars are 5,000 ounces. With silver at $40, we're talking about $200,000 a bar. So who is taking delivery? It's not mom and pop. It's big institutions who can take thousands of bars worth $200,000 each. And if we look over to the gold side of things here, you can see that in August and every month before that, with the exception of June, the number of bars called for delivery were massively greater than the previous year. So someone is also taking delivery of the physical gold bars. So what can we conclude? Well, we have to conclude that this is some very important buyer who knows which way the wind blows, and this is the sort of buyer who doesn't like to lose money. So when the heavyweights are betting on something, and they're betting on both gold and silver, as we just saw, the smaller investors should be paying attention. So if you smell smoke, and I smell smoke, you don't wait for someone to yell, "Fire!" before you start moving. Now, we're going to look at some other reasons behind the surge in silver in particular. Gold, we know the story. It's central bank buying. It's distrust of the dollar. It's the sound money that people can hold, and it's had a history of 5,000 years. But silver's got some peculiarities about it. So what I'm going to do now is look at the Silver Institute just to see the supply and demand. And here we are. That's the Silver Institute. You can see that the mined production is going down, down, down year after year after year. We have less mine production now in 2025 than we had a decade ago in 2016. Yet the demand is going up, up, up. We have more demand now in 2025, 1,148, than we had in 2016. And you can see that there came a point, which was about 2021, where the demand for silver for the first time ever exceeded the supply of silver. And that continued in 2022, continued in 2023, continued in 2024, and it's continuing this way this year, where we have a surplus demand over and above the supply. So where's the difference coming from? Well, the difference has to come from you and I. In other words, the price has to be high enough to incite people to recycle their silver, to sell it back to the system so that it can be absorbed in the main use of main use of silver, which is the industrial use in electronics and electrical things. So why isn't production rising despite the higher prices? The reason is because most of the silver comes as a byproduct from other mining operations, especially gold and copper. Now, here's a fun fact. According to the Silver Institute, we're buying 204 million ounces of silver for investment every year, this year in particular. That's one 1 ounce coin for every 45 people on the planet. Just imagine what would happen if everyone wanted to own 1 ounce of silver. Do you have your fair share? Now, we've got a little bit of breaking news from a couple of days ago on August the 25th. That was 6 days ago. And I'm going to bring that up now to have a look at. And there we are. It's on the screen in front of you. The Department of the Interior has released the draft 2025 list of critical minerals. And there's some new additions. Potash, silicon, copper, silver, rhenium, and lead were recommended for inclusion in the list, and arsenic and tellurium were recommended for removal. Now, what does that mean? It means silver is going onto the critical minerals list for the first time ever. Well, maybe not since the 1950s. We don't know that far back. But it's going onto the critical minerals list, which means the USA will now have to build a stockpile of silver. Now, they did have a stockpile back in the 1950s, 60s, and 70s, which they sold off by the 1980s. And that stockpile was 2.1 billion ounces of silver. Now, to put that in perspective, 2.1 billion ounces of silver is more than 2 years' supply. You see here we've got an annual mine production of 900 million ounces. So 2.1 billion that they used to have is more than double that. Now, I don't think they'll need to buy that much, and they certainly couldn't. It would be impossible. But if they start to buy any amount of silver for their stockpile, it will push the price higher, and I think that's what's being anticipated as we speak. So the price of silver and gold today are really going crazy. Now, I'm just going to have a quick look at what they're doing as we speak. So we're going to go across now. We're looking at the price of silver here. This is a live price. It's, as I speak, it's $40.75, $40.75. The price of silver is up $1 since this morning. A dollar rise is very, very unusual. It's up more than 2.5%. And if we go down to gold, to look at gold here, we can see that gold is also up $29 at an all-time record, 3,476. That's an all-time record. So US is closed. Who's buying it? It must be the Europeans. If you look just here, you can see that white line on the screen, this white line, which is just here. That white line represents the close of business on Friday and the start of business today. So you can see it was rising. The gold price has been rising day after day after day. It's been taking days to rise, but today it shot up again to the record. The record was just above here, about $3,450, and we've shot to a new record. And as far as silver is concerned, it's the record for about 10 years. So if I'm looking here at the silver chart, so there, the white line shows you the move today. If you look at what's happening to the silver price, it looks like it's going to carry on going up. And, a lot of people think that the $50, we're at $40 at the moment. A lot of people think that $50 is easy peasy from here. And, I'm hearing many people talk about silver going into the hundreds of dollars. I mean, I myself have done a video suggesting that under a particular set of circumstances, it could easily rise well above $100.
As silver continues to push beyond $40 and gold presses into record territory, the momentum in precious metals is becoming undeniable. What makes this move so important isn't just the price action, but the structural forces behind it. Supply is tight, industrial demand is soaring, and now policy shifts are giving silver recognition as a critical mineral. At the same time, institutional investors are quietly accumulating physical bars in volumes that retail buyers could never hope to match. For long-term investors, the opportunity lies not only in owning metals themselves, but also in recognizing how these shifts will reshape the broader financial system. Precious metals are transitioning from niche assets into core holdings of governments, institutions, and individuals seeking stability. The window to prepare may not remain open for long. If you found this breakdown useful, please give the video a like, share it with fellow investors, and subscribe to the channel. Your support helps us continue bringing you sharp, fact-driven insights in a world where truth is in short supply. Thanks for watching.